Now, well, welcome today again, people, to Meet the Gurus, another event where we have a wonderful expert, Itai Sela. Itai, welcome.
Thanks, Paul. Good morning. Thanks for having me.
Yeah, I appreciate your time and definitely excited to talk about what's going on in the digital payments world because we all seem to be paying everything from smart cards to watches to our phone to, I don't know, maybe sometime in the future, our glasses.
The
But
card
it's
will come in. Everything will be paying for something.
Yeah, it's quite amazing. I mean, years ago, I went back into time where years ago in Japan. I mean, I'm in the States, you're in the States, but in over many countries around the world, they were paying for things at the vending machine with their phones.
Yeah.
So, often the U.S. thinks we're ahead, but we're often far behind in many areas. So, tell me a little about yourself. How did you get into the payments business and what you do and what B2 does? And just give us a little picture so we know how to frame the discussion.
Sure. So I started in payments back in 1999. I was back in Israel back then, and one of the major banks split off and had to start up their own credit card company. So I basically sat there and did some of the technology projects, predominantly with Visa and MasterCard, to set up the chip, obviously, project. Started with EMV back then, was just in its infancy, and then everything around the acquiring and gateways and things like that, get the market up and running. From that, obviously, I ventured out into starting my own company, one of them back in 2005, and then started B2 around 2006. B2 is headed up in Canada. So back in 2006, I spent a lot of time in Canada migrating, helping the Canadian market migrate, especially around Interac and some of the unique stuff in the Canadian landscape. And so B2 started there, basically providing services and predominantly terminal development solutions for the merchants and the acquirers. And then later in 2011, when Visa announced their liability shift down in the U.S., I moved down here to Florida, which I now reside here. And basically, we've been helping the U.S. market migrate basically to EMV and contactless over the last several years, and now obviously moving into new adventures into the payments world, such as secure remote commerce, 3DS, which is coming out, QR codes. There's a lot of stuff, a lot of advancement going on, especially in the e-commerce space and the touchless space that is coming, especially due to COVID-19 over the last year and a half. I do a couple other things. I'm one of the steering committee members and an officer in the U.S. Payments Forum, which basically helps the U.S. market migrate into new and advanced payments. And I also chair the technical committee for the Merchant Advisory Group here in the U.S. as well. So with that, I'll turn it
That's
over to you.
quite a lot. So, talk about you used the acronym EMV. What does it stand for? What does it mean? And how does it impact the cards world?
So EMV surprisingly stands for Europay, MasterCard, and Visa. Europay no longer exists. It was bought by MasterCard probably back in 2001 or 2002, if I have my dates right.
Hmm.
But today it also incorporates also other payment brands into it, which is our American Express, Discover, JCB, and UnionPay. So all of them are part of this organization that basically was set up to build a more secure payment specification to combat fraud. And predominantly, it was set up to do it in the card present world. But as the world is evolving more and more online, EMV is now taking more of a role into the e-com and the card not present with their three domain security, which they published, and QR codes and secure remote commerce, which is basically the payment button on the web page.
Hmm.
And so they've been taking a more active role into getting into that space as well.
Digital payments overall falls into this big rubric, big category of things that we call digital transformation, where organizations are realizing that they are digital, they're information businesses in one form or another, and obviously payments, is top of the list when you ask people what they think about among besides family, friends, and other things like that. It's usually money, and obviously payments going in and out of your accounts is pretty important. So what is digital transformation look for like for a lot of companies? I mean, that's a very generic question, of course. So you can answer it in lots of different ways. But obviously there are companies that are payments companies, but there are those companies that are flower shops. There are those companies that are in all sorts of other businesses where payments used to come in the form of wire transfers or cash. And frankly, because of COVID these days, people don't want to touch cash even. So obviously the sector has even had a greater explosion. So what did digital payments overall look like for industries? And if you're a company, how are you thinking about it in terms of transformation?
So the way I like to talk about it is, payments usually. So when we look at a consumer, the act of paying is not a fun one, right? When you're paying, money's coming out of your account. You're actually giving away your money. Obviously, you're getting something in return, but you're giving away your money. So paying for something is not a fun exercise. So one of the big things in the digital transformation is really to try to find ways to make payments painless, seamless, invisible. There's all these different words that we're trying to use in the payment industry today, so that when people are paying, they're not actually involved in the payment for too long. So that painful process that they're going through for paying for something is not taking very long. So this can happen, which we've seen with Apple Pay, Google Pay, or all the X Pays with, just double clicking a button on your phone and you can go directly into your payment card or your preferred payment card. We see this in transit, for example, where it's seamless, where you can just tap your phone. You don't even have to open it up in order to pass through a turnstile. We see this as part of the secure remote commerce with just having a payment button. So it's a one-click payment experience. You set it up once and you can just check out. So all these different things, this is what we're kind of seeing, whether you're a flower shop or whether you're Amazon or whoever you may be, what is the best way to basically allow people to access to their funds, whether it's through credit, debit, prepaid, whatever the product may be, and how quickly and invisible can we actually do it in the years to come. And with all of that, of course, one of the biggest things that we deal with in the payment industry is making sure everything may be invisible and nice and one click and all that, but we have to keep the security as well, because we have to keep the trust of the consumers in these payment products. Because otherwise, they'll just go back to cash, even though many of them don't like using it. But
Right.
we want to make sure that people are secure when they're, or have a sense of, at least, of security when they're using the various payment products and payment systems that we enable for them.
So obviously there are going to be standards that are set by the industry, et cetera. But you've got all sorts of people, organizations that come in and say, "Look, I've got a new method of pay, of wanting to tap into that." Let's say blockchain, Bitcoin, obviously being one of those. And how does the organization, let's say, that controls the money in this case, let's say your bank, right, or your savings, how do they validate? What is the process for validation that any big, unicorn number four is going to be is going to be trusted?
Right. So, first of all, at B2, we focus a lot more on the payment brands, right? So most of the payments that we are involved in is everything around, the major payment organizations in the world, right? Something that's standard that can be accepted around the world. The way I like to explain Bitcoin and blockchain, which are two completely different things. Blockchain is technology that, more and more fintechs and banks and in many stakeholders in the payment industry are actually evaluating to see what makes sense to actually migrate to that type of decentralized technology. But when we talk about Bitcoin or any of the cryptocurrencies, that's really, at the end of the day, just another currency, right?
Right.
So just like you can take your Visa card or your MasterCard and you can pay in 28 different currencies around the world today, which obviously there's a lot more currencies, but those are the currencies that the major brand supports.
Right.
One of the other ones could be various types of cryptocurrencies, right? Now, that will depend on how much the banks and the regulators basically allow that to be a more close to a fiat currency, if you will, right? And not so much into the ether, which is what it's kind of right now. But the way we see it at the end, and there's a lot of interest from the payment brands, the Visas, the MasterCards,
Sure.
to look into this. And you can see a lot of things that they're doing with trying to go into blockchain, into cryptocurrencies, in order to be ready for, involvement where this will come into play and people will want to be able to use that in order to make payments, right?
Right, and if you go on,
Yeah,
just to interrupt for 1 second, if I go on Venmo and sending people back and forth money, when my money comes in, they always suggest, "Hey, would you like to transfer this or to invest essentially into crypto?" And they give you various currencies you can invest in.
right.
Yeah.
Yeah, so Venmo, for example, and we it is a very interesting environment in the person to person and account to account
Yep.
type of payment products. And what you see is they kind of started with more of a social environment, getting people to pay each other. Now they're also providing you a form of payment, so you can actually get a MasterCard credit or debit card.
Hmm.
And what they're trying to do is a lot of people just keep their money on their Venmo account, and that money isn't really doing anything. So what they're trying to then say is, okay, what can we still do with your money while your money is waiting?
Right.
So if you invest, we can still make money on that, right? So
Right.
how do we actually use the money that you have in your account? And Venmo is quite an interesting company in that. They're trying to find different ways to give people that access to different things without having to transfer it to somewhere else, right?
Mm-hmm.
They want to kind of try to be something for everybody, similar to kind of what WeChat Pay is doing, obviously
Mm-hmm.
in China and things like that.
Well,
I think one
presumably,
of the
sorry, we'll interrupt. So presumably they're going to do what every financial institution has ever done, but also get into the more exciting, lucrative areas and the ones that are obviously customer facing.
Right, and that's one of the things I was just going to say that we see a lot more in this digital transformation is we see, the major financial institutions which used to govern everything and everybody would hold their money there and basically those would be the entities that would provide you the payment products. We're now seeing a lot more of the fintechs and basically these startup companies coming in and trying to break that mold and getting people out of the major banks and these major financial institutions are really trying to keep up with their, dinosauric, prehistoric type of systems, very, very slow to move, very, very cautious in different things that they do, while the fintechs are very, very fast. They have a lot of innovation. And we see that, and that gives a lot of excitement into the payment industry because it brings a lot of change. We see this, for example, with buy now, pay later, which is not a revolution. For example, in Israel, we've had this since 1992, when we started writing the first specification. So people, for example, in that region go, buy now, pay later. Who cares that we've had that like for
Right.
3 decades?
Right.
But it's gaining more momentum because it's coming into mainstream. It's coming from the fintechs. It's exciting.
Right.
It's enabling people to get easier finances, especially on the merchant side. So and especially when there's obviously financial difficulties for people, it makes it much easier to do it with a non-banking partner, right?
Right. There are a lot of these companies that have come along even for paying for education. You go onto a website and you want to pay for something and it could be $500, it could be $150. They're these days seeming to offer you an alternative, buy now, pay later. And
Yeah.
those things actually in the car industry always seem to be the very low end, right? Kind of like but now it's pervasive and these the companies isn't it's not so much from my experience, and you know this better in your world, of course. It seems to be it's not the opportunities that take financial institutions into the next phase; it's the threats. It's these
Right.
Venmos of the world that says, "Look," and then someone comes along and the institution says, someone's about to eat our lunch. We better move quickly."
Absolutely.
So,
And I think, what we're kind of seeing as well is people are moving away from the ways that they used to transact. So we're seeing a lot of movement, especially due to COVID, a lot of movement going into the e-com space. You see a lot more buy online, pick up in store. The whole way that we shop and we interact with a payment process is very, very different. And merchants are seeing this as well. I mean, you look at merchants trying to reinvent themselves with the shopping experience, not so much the payment experience, but the shopping experience, because most people just don't want to go into the same store again, look at the same, clothes, the same shoes. It's just on the wall. It's just on a rack. They want to get a different experience. And we start seeing this with major merchants trying to get more of a shopping experience than it is more just walking into a store trying something on, because more and more people want to do this now from home. And there's, the brick and mortar environment is quite stressed in bringing people more and getting more foot traffic in there.
mm-hmm.
When more and more people, just much easier to do it on your computer
Now,
or your phone.
This may go out into a bit of a deep end, and I don't want to get into politics at all. But in terms of payments and authentication, seem to be not too far apart from each other. Just because a payment needs to get authentic, the person needs to be authenticated, the transaction needs to be authenticated. I thought back in the day, literally 20 years ago, that why wouldn't they use ATMs for voting? Again, I don't want to get into that, but because they're everywhere, right? Because there's a camera that can see you. So, but in terms of the difference, how do you distinguish in your mind? Is there a way in which these authentication mechanisms, these payment mechanisms, could just be used for authentication? Let's, again, not to get into politics, but COVID. Are you COVID vaccinated? Swipe your Visa or your Venmo So how do you distinguish? Because to me, I'm beginning to think about it as talking to you that there's not that big a difference between a payment because it has to be authenticated and just an authentication.
So it's very interesting you raise that, Paul, because we're actually seeing some advancement in that. There's a lot of work being done right now in the U.S. around mobile driver's license, actually in the world, around mobile driver's license. And what they're trying to do is they're trying to find a way to make a mobile driver's license that's digital, so it's not just a card like we have today, right? And everybody can use that mobile driver's license for identification or for authentication. So whether you're going to show this at a merchant when you want to buy booze because you need to be over 18, whether you want to vote, whether you want to go and register somewhere. So
Country to
whatever that may
country.
be.
Country to
What's that?
country. You want to go from France to Spain if you're in the European Union,
Well, we have
or
passports for that, right? We have passports for that.
but no,
So
I'm saying the same idea, right? The same notion.
right. So the passports, by the way, have gone digital. There's a lot of more cryptography that's gone into these passports to make them more secure
Mm-hmm.
and be able to basically authenticate them in a more digital way than they used to be before, when somebody would just read, something from the passport themselves. I think one of the big things when we look at payments and authentication is definitely one of the major building blocks in a payment transaction. So we want to authenticate the customer, and you see around the world, sometimes we use PINs, sometimes we use biometrics. There's all these different ways of authenticating the customer. But the big challenge with security and payments is not so much around the authentication, it's more on the authorization. So I know that Paul is doing a transaction, but if Paul doesn't have any money, then the bank doesn't care that Paul's doing the transaction because it's on the hook to pay the money. So just knowing that Paul is actually the one using the payment product that they are using, whether it's online or in store, doesn't really matter. At the end of the day, if I can make sure that Paul's credentials can't leak to anybody else and nobody can actually falsify them, it's less relevant for me to authenticate Paul. It's more relevant for me to authorize Paul in a specific transaction.
That's a
Okay, so
subtlety that I think you need to repeat a few times for me,
okay,
because it's a very sophisticated subtlety which you
yeah,
probably
so
live and breathe. But so
yeah, so
explain
look,
that again.
I'll give you a perfect example
Sure.
because we have probably people from around the world with PIN, right? So
Right.
when you take a chip card today, if you look at in Europe, predominantly Canada as well, it's all what they call chip and PIN. So every transaction that you use your chip card, you have to enter a PIN,
Uh-huh.
right? With contactless, it's moving away a little bit because obviously we're trying to do a tap and go experience. And I don't know if you've heard this, but just in the UK, just I think it was last week or this week even, they've raised their contactless limits to 100 pounds. So now anything under 100 pounds, no PIN. Even though if you insert your card, every single cent you pay requires a PIN,
Interesting.
right?
But you
So
don't do
in
that in
the
the
US,
States. You don't do that in the
correct,
States. Go ahead.
correct. In the
Keep going.
US, we're less PIN oriented. Why? Because the need to authenticate the cardholder using a PIN, okay, and the cost to implement the infrastructure to be able to authenticate the PIN was far too expensive, okay, than the benefit that it brings in a financial institution to know Paul's card wasn't stolen, okay? And so if I know that basically counterfeiting or skimming a physical chip card is very, very expensive and complicated, not that it can't be done, but very, very expensive and complicated, then the only thing the PIN protects is against lost and stolen. So how scalable is lost and stolen attacks? That means I got to go see Paul, pick up his card. Think about COVID where nobody's seeing each other, nobody's getting close to each other. I now have to get to your wallet, steal your card, and then the PIN will protect me. But all the other security features I have protect me against enabling the financial institution to know, hey, this is a genuine card. It belongs to Paul. I'm not 100% sure that Paul's using it,
Right.
but I'm pretty sure. I
Right.
just want to make sure that whoever's transacting with this card, I'm going to be able to collect the funds that I'm going to have to end up paying to the merchant once this is authorized. So that's the authorization part. We want to make sure that if Paul's delinquent or in dispute or there's exceeded all their prepaid funds or whatever credit balance or whatever you have, that we're not continuing to give you the ability to authorize transactions, even if I was able to authenticate you, right? For example, you put a PIN in. Okay, great. I know it's Paul. The card is genuine, but there's no money. So big deal, right? So now we actually see fintechs, by the way, just as digressing to that, we see fintechs trying to improve the authorization rates. So for example, in the brick and mortar, very easy because we have EMV and it does have that layer of protection. In the e-commerce, much less, right? There's no PIN on the internet, things like that. There's no encryption and security and cryptography like we have in the chip. So how do we, first of all, enable merchants to have a much higher approval rate with less risk? And then the same thing is, as we move liability from merchants to issuers on the e-commerce space with 3D Secure, how do we make sure that the issuers don't continue to take more risk, right? And some of them may decline based on not getting enough information from the merchant, not knowing what's going on with a transaction. So there's now fintech companies that are enabling these issuers to also be able to approve more transactions, either based on risk or even based on the fact that you have a credit transaction and you only want to give somebody, let's say, a 5% overhead, right? they may say, hey, you can even do 10% if this is a merchant like, for example, I don't know, Best Buy or Walmart, where this customer buys all the time and we're just waiting for his paycheck to clear and they'll have money next week. So you should approve it. So there's all these entities that are trying to create, in addition to the layers of security, once the security piece is solved, how do we still enable people to access their funds and make sure that the approval rates are very high and the authorization component is very high, right? Because otherwise, if people keep getting declines on their cards, that's not going to be a payment product they're going to want to use.
Right. And so this is quite interesting because it also bridges into the world of finance about credit risk and about all sorts of things that the financial institutions, in this case you describe them as the issuers, right, have to deal with. So why is it that there are, and some of our clients have huge offshore operations, whether it's the Philippines or Costa Rica or India, why are so many people involved? It seems like what you're describing is highly technical. It's highly, structured. It's highly well thought through. But at the end of the day, there's a lot of people on the other end of that are supporting these institutions. So, explain it to the rest of us mere mortals that don't live in that world. Why is that?
So, it's, well, depending on size, obviously, and the reason they do offshore is obviously because of cost. But the whole idea is if everything was bulletproof secure, many of the people that we needed within the organization would be less. It would be more technical people rather than operational people. But the problem today is because not every transaction that a person does is 100% secure, right? Because somebody can copy your card, do an online transaction, whatever. The problem is people dispute transactions. People charge back transactions. You need to be able to support that. The same thing happens with all the credit and all the credit risk, and obviously the authorization risk and the consumer risk, and all of these things that have to happen in order for us to be able to approve more and more transactions as financial institutions, right? Now, one of the biggest things, and you just alluded to, for example, credit, especially in the U.S. The way that credit works here, right, is, and for those who don't know, we have this credit system of credit scoring, right? But credit scoring, unlike in other countries where if you get a credit card, it means you actually have money in the bank. Nobody's giving you a score. That score will only be used to give you an additional layer of or additional credit balance. But the money is in the bank. The bank knows you. They have all of your other assets. Here, credit card companies have no idea who you are. They source you through the internet. They look at a credit score that comes from 1, 2, or all 3 bureaus. And the way that the credit score number is actually scored in many cases, and we could talk about this for a very long time, is actually quite bad. Because you can actually have people that don't work, that don't make any income, that all they do is pay $1 a month on their credit cards, and all of a sudden they have a very good credit. But that doesn't mean that they can actually pay anything back.
Correct.
And you see this in an environment where the interest levels are zero and sometimes even negative, and our APR in the US can be an average of 18, 19% a year. So that has nothing to do with the cost of money, right? Sure. The money doesn't cost anything. That only has to do with risk. So something in the risk that we're doing and how we're building the risk around credit doesn't work. Because if you need 19%, and by the way, if you go down to Brazil, you'll see it in hundrds of percents, right?
Well,
because
in the States also it's comfortably in the upper 20s often.
Yeah.
Maybe 18 or 19 on average, but certainly that's not unheard of.
Absolutely. Yeah. Absolutely, which is absolutely insane in a world where interest rates are nothing.
Right.
Right. So, and we saw this obviously in mortgages, those rates kind of came down in the US, again, after all the collapse and everything and putting things into place, saying, okay, mortgage rates can come down because the risk around the money isn't that great anymore because we've put something into it. The credit industry needs to get up to speed on that as well. And again, credit, customer service, operations, chargebacks, all of those things, fraud, all of those things require a lot of people today because a lot of things happen through the systems and they don't happen in an automated fashion. Although with AI coming in, right, and a lot of other fintechs, they're trying to solve some of this problem. And sometimes the offshore is cheaper than buying these very, very big systems that can automate a lot of that stuff for you. So that's also a trade-off. We see this, for example, in automated testing and some of the other things that happen in the industry.
That's fascinating. So a lot of this, the issue that you're describing, if I'm summarizing it in some more layman's way, has to do with the fact that we have a very broken credit scoring system.
My personal opinion is that it is.
No, I mean, I
Yes.
think most people would say that. Most people would say that because you can gain your own credit score fairly easily. There's a whole bunch of companies that will help you gain your credit
And
score.
and if you want, I mean, I have this whole theory about the credit process because when I came back to the U.S., I wasn't here for about 20 years,
Mm-hmm.
so my credit was dormant, right? And the way I could actually see with somebody who's attacked one of the credit bureaus, obviously who stole all that information, they now know all of these people with green cards and visas that are no longer in the country that have social security numbers that are dormant. To open up an account with a secured credit card in the bank takes 2 seconds.
Right.
You fake an ID because the banks don't know how to check whether your passport is actually genuine or not,
Mm-hmm.
right? Then you need to bring another form of ID, which could be a credit card with your name on it, which
Right.
costs $1, right?
Right.
And you open up a credit, you open up a secured credit card, you put $200 in the bank, and now you start building your credit. Before you know it, 3 years later, you've got $50,000, $60,000, not even having to spend that, right? And then all of a sudden, I can now sell this $50,000 credit score with a social security number for a premium. Because when the bank calls me, I'm the fraudster. I've got all the KYC, knowing your customer.
Right.
Nobody can stop me. They actually think that I'm a good customer because I'm now using my credit. They're going to be able to charge me 25%. Only nobody's ever going to pay, right? And this is one of the issues around having a lot of this credit system in the way that it works. But there's a lot of success with it as well.
Right.
You can't have 300 million people and manually credit score everybody, right? It
Right.
also doesn't work. So there has to be a balance, and it's something that keeps evolving. But just going back to your authentication, one of the big things I always say is, how do you authenticate somebody where you don't have the underlying identification solved, right? So I'll give you an example. We talked about passports. Again, look at the US. When I go to get my passport, right? How do I prove that I'm a citizen of the United States? Well, there's 240 different pieces of paper that I can use, from birth certificates to naturalization or whatever. All of those can be fraudulated very, very easily.
And none of
Then
them
what do you
actually.
get?
I don't know that they go into any database and actually check them.
No.
Especially if
And
you're
so
in a hurry to get on a plane, they do it in a few
there,
hours,
there's
right?
not al- well, so there's not always a database to check the pieces of paper. And so what happens though is you're now turning a piece of paper that's hard to validate into something that is extremely valuable, like an electronic passport, which it has cryptography in it.
Right.
So what you get is you get a very, very good passport with a lot of security and a lot of bells and whistles. But how do you know that the person actually getting the passport is the real person?
Right.
And so it starts from there. And so we have to, before we can get into all the authentication that you're talking about in payments,
Mm-hmm.
there has to be a much better infrastructure for identification in general, and making sure the identification process is very good, so that when you actually apply that and give people more advanced identification mechanisms like mobile driver's license, electronic passports, those type of things, that you're not getting fraud in generating those.
Mm-hmm.
And then that generates more and more fraud down the road with the authentication process as well.
The funny thing is, and again, not to get into politics, is that the all of people of my generation and others have always thought, Big Brother is going to take over because they have all this information about you, which, of course, we know Big Brother is now Facebook and Google and all the other players that know everything about you. The government could never figure out, right? But when you go back to the payments world, you're talking about, there's this big gap still because those databases are not accessible, right? I mean, I don't know to what extent those are available, but a lot of these are just still, they're kind of shooting at a fish in a pond. They don't know what they don't know. They don't know who you are at the end of the
And
day.
it's gonna it can only get worse because the more we start to use blockchain, which decentralizes everything and,
Right.
and basically makes, and again, I'm not talking about the architecture itself where you can just you still have an owner, but it's decentralized versus not have an owner and be decentralized, right? Still the same blockchain technology.
Mm-hmm.
That's even worse because now you don't even have any ownership around who controls the data, right? Like it doesn't, like here at least you can go to Google, Facebook and say, okay, we demand, by the way, I just saw something on the CFCB that they're now saying that you have to, they're requiring them to basically disclose their databases of something, right? So, but at least you have an owner. Where you go into a decentralized something like cryptocurrency like Bitcoin, there's no owner. So you've got nowhere to go when something happens, right? Which is also one of the issues with some customers to say, hey, I lost my money through Bitcoin. Who do I call? There's no bank to call. There's no FDIC. There's no insurance. There's nothing, right? So that's why there's still a lot of hesitation, again, depending on who the audience is, whether or not somebody should use a cryptocurrency or not. And that's the reason why the payment brands are hesitant. They're getting there, but they're still not all in because of some of the risks around that.
So you not only are an expert in the field, I think you've demonstrated that 15 times over today, but you also teach in this area, so you obviously communicate that knowledge because obviously you knowing the knowledge and your company knowing it and all your customers, etc., being helped by that, there's just so many more people who are touching these systems that need to understand it. And you're running courses, you're going to be running them on our platform or for our clients. And so I think that you've demonstrated today that you could speak about this at any level. Strategically, what are the problems? Technically, sort of microcosmically what they are, and that can be delivered in any sort of mechanism, whether it's
That's
online,
right.
obviously today. But
And we didn't even do anything technical today. Today was all, yeah. I mean,
yeah,
we
yeah, you
used
didn't.
some acronyms which sound technical, but they weren't technical at all.
Right.
Yeah, we
You
go way
didn't.
down into the weeds when we need to.
Yeah, it's fantastic, Itai. It's wonderful having you here today, and we'll see you again on the Meet the Gurus and on our platform. Thanks so much for taking the time.
Yeah, thanks so much for inviting me. Have a good one.